Well, welcome back to Small Caps and our fortnightly update with the wonderful, the effervescent, the always smiling Tony Locantro from Alto Capital, our first get-together for 2021. Tony Locantro, it is lovely to see your happy, smiling face. Are you smiling yet?
Well, I don't know if I brushed my teeth properly, but anyway, no, I've actually updating my equipment, so I have a light now that stares straight at me. So hopefully viewers can see me. It should be a little bit better. The dog's not on the lounge yet. I am getting curtains soon, so we're going to get there, Kerry. And it's always awesome to talk to you. I think you're one of the best interviewers in the equities industry. So yeah, it's always a pleasure.
Wow. Well, that's a great way to start 2021, Tony. Thank you. And last week we did the virtual gold conference. That was fantastic fun. You and Shay Russell head to head.
Yeah, and the good thing was we both ended up with returns in the mid-90s, and it was too close to call. So I'm happy to go the tie on that one. And yeah, it's always good to discuss investment strategies because Shay's certainly not stupid, and I actually liked a lot of what she had to say. So viewers should have benefited from that because these days it's all about education and having the patience to hold stuff and do research rather than rely on tips or Twitter.
Well, you know what, Tony, that's really interesting as well, because right now, I don't know about you, but I said it to someone just the other day. It feels a little bit casino-like at the moment because we are getting a lot of people. So, everyone's piling in and they're not really educating themselves. They're not listening properly. They're just, it's kind of like, let's just pour in. And there's a lot of funny money just piling in without actually educating themselves. Are you seeing that a little bit?
Well, I view markets as a collective of people with NFI, what they're doing.
Yeah.
And that even extends to a lot of my 20-year clients. I mean, no one has a friggin' clue. And a lot of people, they don't get the truth. I liken it to, you call the company the campfire and you've got a crowd around the campfire. One day they're hugging, kissing, social distancing as best they can. And the next night they're punching the shit out of each other. So I think a lot of companies just get on with business and it's the crowd that's going crazy, and the world's going crazy at the moment. And I read an article about this investor in GameStop who put $1.1 million in, quickly lost $850,000, and he cries to his mummy saying he wants his money back. I've spent, since around the time Kurt Cobain died, that's how I remember it, getting involved in the market, absorbing everything. And now I've only finally starting to crack the code. So I don't know what idea these new investors have, but asset prices don't go up forever. There is volatility. There's been volatility in my stocks over the last couple of weeks, but you just got to cut through the noise, Kerry. And if you buy the right gold company, I had a client who bought Northern Star at 5 cents and he held it to 13.77. So he turned $7,000 into 1.2. But there's a picture of him next to complacency or comatose in the dictionary. So some people, if you don't open your mail, sometimes you get a surprise. But on the whole, to me, it's about fundamentals and research. But the fundamental textbook essentially has been thrown out in favor of a quick buck. And the way I see it is that there's a marshmallow test you give a 4-year-old where you'll leave the room and they have to wait for the second marshmallow. And often it's those that can wait are the people that are more steady, can accumulate things, than rather have that punting culture.
But it is a bit of a punting culture at the moment, and the market seems to be just going up and up and up and up. Do you think that we are heading for a bit of a fall, or do you think with all of this government stimulus going into the market, with people continually receiving stimulus checks and, there's been more US dollars printed in the past 12 months than there have been since, for the last 20 years. Do you think that that's a recipe for the stock market to continue to go up?
Well, in 1929, I think it was Irving Fisher said stocks have reached a permanently high plateau. Famous last words. But the way I think about it is markets are overheated. We do have, it's mainly index driven. You look at the Dow Jones, you look at these assets rising, but we still had the day trading madness before COVID. And I think what's become of Australian speculators is they're tuned into Twitter, they're tuned into WhatsApp groups, and they're just pip trading. And when the pip traders come to one of my stocks, I've got no choice but to act in my client's best interests and let them have it. So, but these pip traders have endless volume as long as they clean out their holding at the end of the day. So I just think this culture of punting will stay. But when some of the fads end, I liken it now like lithium stocks. All the lithium stocks now look like a South American swimsuit parade where you take any of one of them home, but which one's educated and has a decent mother? So your mother-in-law's not too bad. But to me, that's what a lot of stocks.
I've got to put my...
Classic. Oh, Jesus shone a light on you.
Jesus shone the light on me and I had to put that blind down.
Holy shit, that's some afternoon sun.
It was, wasn't it?
Where was I?
Well, you were just talking about the pip traders and how they were just coming in and frothing the market to insanity. But, you know, the fundamentals are there for good companies. And I guess my question would be, how do you pick a good company?
Tough question. It takes years of research. I'm happy to suggest some books or say to investors, these are the quarterly reports you need to read. You need to get away from social media as best you can. And in the old days, I used to pull out the share pages and go through it with a highlighter and look for value. And interesting example is if you walked around with a bat of a fin review in your pocket and looked at share prices, you still wouldn't think, apart from some volume, that social media has taken over. So it's all about diligent research. It's about buying a ticket on a long-term journey with a company. And sometimes the best trading tool is actually your backside.
What do you mean by that?
Doing nothing. Just buy the right company and sit tight. Buy right, sit tight. Or do what I'm doing, adopt the coffee can approach, which I read in the book 100 Baggers, where every year on my anniversary, I'm going to sell a portion of one of my long-term holds over 5 years. I'm going to give that company 5 years to grow.
Talk to me about that book.
It's called 100 Baggers by Christopher Mayer. It's based on the US market, but it talks about stocks that went 100 times in value, like a company that went 10 cents to $10 or $1 to $100. And it goes through the history of companies like Southwest Airlines, Monster Beverages, some resource companies. And 100 baggers are rare, but you can nail them if you buy right.
Do you think there are 100 baggers out there today, or has the market changed?
The market, I don't think will ever change. It's like I was in the police force for 8 years and royal commissions were in there to try and change the culture. You cannot change the culture of the stock market that's been around since 1635. So I think there's always going to be fundamental value. And the way I looked at it, when we got poleaxed in March last year during COVID, I actually bought some stocks at very cheap prices that I think are a chance of 100 bagging. And due to my sanity, I won't mention the stock.
Due to your sanity, what do you mean?
Well, people think I'm crazy.
What, that you bought those stocks when it came back?
Yeah, and I think that if you can buy a stock at 10 cents, sometimes $10 isn't such a big ask.
Wow.
It can be done. It can be done. I think those that bought into CSL in 1994 when the the prospectus would have been a doorway, have made probably 400-500 times their money. But again, that was 27 years ago. So it takes a bit of patience. It takes a bit of luck. I guess I'm almost 50. I'm not here for a 30-year hold.
Well, no, neither am I, Tony, but we won't even go into what number I'm at the moment. Let's talk sectors at the moment. The gold sector, you know, I'm a gold nerd. I'm wearing my gold jacket tonight. Gold's been, I'm not even going to talk about the Elon Musk story today because I know you don't even like that one, but gold's been fairly soft at the moment. You like the gold sector, as do I, but it's been trending a little bit sideways at the moment. Do you see that that's going to be a good sector at the moment? It's a nice leverage in the gold mining space for 2021.
I do like it. As I've mentioned before, the only thing that major headwind for Australian investors has been our strong currency. Yeah. So the Aussie gold price is now just under 2,400. Companies are still spitting cash. We are going to see, I think, further consolidation. But at some point there, the producers were priced for absolute perfection. And I think a bit of interest has waned in our major producers. I think they've all corrected. And the gold stocks do have some nasty pullbacks. And you don't actually have to have a sizable correction in the gold stocks. So instead of buying stocks that'll just go up or down on insto money flow or the spot gold price, I go well down the food chain and look for the next batch of companies coming through. And to me, that provides the best risk reward.
I do want to ask you about the recent merger, if you don't mind, between Saracen and Northern Star. Do you and their share prices have both come back a little bit. That surprised me. I would have thought that would have strengthened on the fact that they're joining forces. Did that surprise you at all?
It does a little bit, but I think it reflects the lack of hot money or sentiment towards that sector. Now you're looking at a much bigger company. It's probably going to attract the similar institutions that are there in Newcrest. But the gold price has probably disappointed a little bit, even in US dollars. So I can see there probably a little bit of an outflow into some hotter sectors like the EV battery theme is making a bit of a comeback. Also, we've seen the bank stocks recover as well for some pretty nasty lows. Westpac got down to, I think, about $13.69 during the crunch, and now we've seen it back over $22. So I think there's been probably a little bit of a rotation out of the gold producers and into the bank stocks, unfortunately, but that's the way it goes.
So moving away from gold, I mean, there's a lot of sectors to cover. I know that you like the biotech sector as well. Just going into biotech, do you see that strengthening a little bit? I mean, we've got COVID, we've got a lot of focus on pharma at the moment. Is that a sector that you see strengthening in 2021?
For sure. I've actually floated 2 biotech companies, and one of them yesterday went absolutely crazy. That was Exopharm. Some news came out of Israel that they used exosomes. They loaded a cancer drug with exosomes and targeted COVID patients, and apparently 29 out of 30 were cured of COVID, and they were mild to severe cases. So that set the stock Exopharm alight. I should disclose to viewers that as a client base, as an economy, we hold around 13% of the company.
Wow.
Yeah, it's a big bet for me. So far, so good. But to me, the long-term effects of COVID won't be known because it hasn't been around a long time. And I'm looking at my cholesterol brain injury stock, Narada, has done quite well. Their recent studies on engineered mice showed a 57% reduction in cholesterol. Pleasingly, the LDL side declined as well. So I'm thinking that those stocks involved in fibrosis, in lung, COPD, and other side effects of COVID are going to do extremely well. And I've also just started recommending and buying a CAR-T cancer therapy stock in the US, based in the US, called Chimeric Therapeutics, that is looking at treating GBM, which is brain cancer, through the toxin of a scorpion. So there's lots of interest in biotech stocks. The upside potential is enormous, but it is similar to a junior explorer.
Now, Tony, you're not a scientist. How do you cut through all of the different biotech companies that are out there? How do you, because there's a lot of them out there, how do you narrow it down into the ones that you think are potentially the winners from the losers? There's a lot of them out there.
Doing face-to-face meetings with management, I was going to the Queenstown BioShares conference when I could travel. I've then been fortunate that I was involved in Noxapharm, which has had some great news today, and they suggested that I be involved in future IPOs. And then once you're in with the right people, you tend to get the good deals. So I like to go face-to-face with people. I can tell who's telling me fibs. My lie detector's starting to work really well. And once you're in with that quality people, you then look at the risk reward. And I look at a stock that could increase 400-500%, but does have the downside. And as long as you're not reliant on one clinical trial or one drug, but a lot of the companies, once you get through phase one, you prove safety, you have a bit of efficacy, then the big pharmas will step in. And some of these preclinical deals are astronomical. So it just takes years of experience. Obviously, there are going to be some duds along the way. But if you have a decent portfolio of biotechs out of 10, say, it only takes a few to really come off.
But when you first started, Tony, did you have a few duds in the beginning? Is this just experience over the years that you've now been able to sort the wheat from the chaff?
When I started, I used to rely on a business column in the Sydney Morning Herald. I then used to put stock codes in a hat and draw them out. I lost money hand over fist, but luckily I was only on a police wage, so I was losing between $500 and $1,000. I then fell in love with a web forum. I then fell for some, they were the most popular, so there were a few duds there. Oh yeah, I've had some losers, but what I've found is once you become more patient, do some more research, get to know people, my ratio of dogs now is pretty low.
All right, so advice for people going into 2021 would be the following. Do the homework. Do the research.
Yeah, absolutely. And I'm starting to get a lot of new investors thanks to this program, Kerry. I really appreciate it. But what I'm saying to people is I've invested heavily in an ETF that negatively correlates with the Dow Jones. And the way I see it is people need to have their portfolios insured that are heavily speculative. So, and my ratio is about 10%. So 10% of my total portfolio is an instrument that will increase in value when the Dow Jones finally decides to fall.
And what is that instrument?
It's the BBUS. It's a trading instrument. It's trading around $1.39 at the moment. So for every 1% the Dow Jones average falls, this will return between 2.25% and 2.75%. But once a year, these have a decent spike because the Dow Jones always gets slapped around. And I think 1,000-point down night isn't too far away.
Wow. Okay, so that's just the volatility of the market, and that's just an insurance policy that you take and you encourage all your clients to take.
Of course, because last year and early this year, it's been far too easy to make money. I've had clients that were 5-10 grand investors. Now their portfolios are well in excess of $1 million. It's time to take a step back, never mistake a bull market for brains, and be sensible with the money. The killer of speculators and investors is complacency. People get lazy. They don't have capital moving. The worst thing someone can say to me is, I'm free carried. It doesn't matter. Well, the money you've made doesn't matter if you're laying bricks or selling yourself on the street, it's still money, and that money doesn't know you. And people just don't appreciate money that's been made out of profits. And I'm happy to give my clients a gobful when they give me these rubbish excuses.
Do you get frustrated? Have you ever sacked a client?
Yes, I have broken up with clients, and I'll say it's not you, it's me. But I'll tell someone straight out, we are not compatible. No amount of money will make me deal with someone I don't like. I'll just come out and say to someone, look, I don't like you. That's it. I mean, life's too short to deal with unlikable people. But yeah, you're a great friend, Kerry. You're a great friend.
Phew. And I'm also a client.
Yes, thank you. I really appreciate that. And I hope to deliver you some stunning returns.
Well, but it's also about listening. It's about listening to people that are smarter than I am. And that's why I like dealing with you, Tony, because you've done the work and you understand the market. And I always say to people, whatever you do, get people that are smarter than you around you, and also listen to people. And a lot of people don't do the listening. So my final question before we finish up our first interview for 2021, give me 3 pieces of advice that you would give people in this current market.
Get yourself some BBUS. You'll sleep at night. When the Dow gets thumped, you will have more money to buy quality thump stocks with.
And before you move on from that, and with the BBUS, you said 10% of your portfolio.
That's what I've done.
Okay.
That's what I've done. I've had some clients ring me and say, should I put $1 million on this? Well, who knows? Biden might be a miracle man and the Dow might go up this year, but no, probably not $1 million bet. But yeah, 10% for me is good enough. It's not going to fully insure my portfolio of speculative stocks because people are going to sell them when the Dow drops. And obviously when the Dow drops, people sell. Buyers don't want to buy because they don't want to make money. And then it's it's like an avalanche.
And that avalanche, it's like any avalanche. You don't see it coming until it's too late and you can't get out of the way.
Yeah, that's it. And if you've really bought the rubbish on the ASX, which there is a lot of it, that company will then come back as something else, and your holding in that stock could be less than the cost of brokerage. So yeah, every financial year people do a cleanup. My next piece of advice, Kerry, is I put out a lot of information on Twitter, and I think, people, if you're after all these tips, follow me on Twitter. I did put up my 4 top book suggestions today in response to a tweet. And I think that if you've got the right temperament, reading those books, if you've got common sense, they should really help you in what you're doing.
What's the Twitter handle?
At Tony Locantro. So I just go under my real name. I don't hide under just that. And yep. I've actually put up my top 15 stocks, which is now 16 because I added Chimeric. But have a look at my pinned tweet and then look at some of those companies on that list, read their quarterly reports, read their exploration updates, read how the management write their announcements. And one of the best pieces of information is the chairman's address. Always look that up because that's the one announcement the ASX can't go through everything. And it's where companies, you can actually sense the passion of the company. And that's probably my best advice at this stage. But if you miserably failed the marshmallow test, it's going to be hard.
Why is the chairman's address so important?
Because I get to talk honestly and openly about the year they've had, what they're doing going forward. And it allows a bit of emotion because announcements these days are devoid of emotion. A lot of them people have to put them in again due to quoting stuff. I just think it's a good way to get to know your company. And these days, there's so many webinars. I think COVID has really seen businesses now focus on webinars, but obviously it's been saturation. So there's probably far too many, but there are some good ones worth watching and you can gauge how a company's going through that webinar.
Yes, and I do virtual gold conference webinars, but of course mine is the best. As you know, Tony, you were on the last one.
Yep.
Quarterly reports, I find them really difficult. How do you make them more palatable?
I always say to my companies that have a highlight section at the front, have 4 or 5 punchy points in bold, and then it is hard from them because you're pretty much reporting information that's already been reported. Like often they can be historical documents, but often there are clues there. One of my explorers, Red Metal, I believe puts out one of the best quarterly reports consistently. And you can read up on all their projects. You can see the pipeline. You can see the risk reward. And that went back to another one of my companies, Minotaur, which has done extremely well. And they put out high quality announcements that were genuine. And these small resource companies are backed by majors. Majors don't back anyone.
All right. Tony Locantro, any final comments before we wrap up our first 2021 interview? Come on, you always have the final comment.
No. Enjoy the market, enjoy the volatility. If you hit the buy button and start sweating, you're probably in the wrong sector or the wrong game. Put your money in a term deposit. But I think those that are doing well, probably one of the main things I can say is stay humble and never mistake a bull market for brains.
And I guess, as we always like to say, do your research and never put a dime of your own money into these crazy markets until you do your research and you get educated, because it is volatile and you can lose the lot if you're not very careful. Tony Locantro, thanks for joining us on Small Caps today. We'll see you in a fortnight.
Look forward to it as usual.